Do not make your first payment on your mortgage until you know this dirty little secret. Most homeowners never question the default payment schedule, but the truth is, switching to biweekly payments could shave years off your loan. If you don't understand this one simple strategy, you'll end up paying your bank far more than you need to, and for no reason at all. I'm Andrew Russell, owner and founder of RCG Mortgage, and I've helped thousands of homeowners save on their monthly interest with little tricks and hacks just like this one. Let me tell you about Michelle and James. Michelle and James were clients of ours, and they bought their dream home. They were just getting married, and they were eventually going to start a family. They bought around a $600,000 and some odd house with a $500,000 mortgage. And their monthly mortgage payment was $3,000 a month. And, you know, for what they were two teachers, that payment was actually somewhat expensive, but they were able to pay it all good going on with their life. Now they realized, for some reason, one of them actually looked at their mortgage statement and was like, I'm not making any dent into the principal. They reached out, we had a nice high-level conversation, kind of went over what it would take to knock down that principal faster. And we talked about the biweekly program. I said, look, guys, both of you are teachers. You're both paid biweekly, meaning every other week you get a check. The servicing company, when we closed their loan and who was servicing their mortgage, we reached out together on a conference call, and I was able to communicate out, hey, they want to go into the biweekly program. So if their mortgage payment was $3,000 a month, they were going to pay $1,500 every 2 weeks. Now it sounds like, you know, what's the big deal? So that turns out to be one extra payment a year. So just by doing this for them, with us holding their hand and kind of coaching them through this process, that one extra payment a year saved them over 4 years off their mortgage. Now, if you do the math, that's $36,000 a year for principal and interest. Times that by 4, that's about $140,000. Now, of course, over the next 20 or so years, they're making an extra $3,000 payment, which is about $60,000 in extra payments to save $140,000. Net savings was about $80,000. So what that did was, by the time this all played out and they were working on kids, and then the kids eventually were going to go to college, just by doing this, they were going to pay their house off and save almost $100,000 a month, which could then be repurposed right into their kids' education. But I hear you guys now, hey, Andrew, I don't have enough money, extra money to throw towards the mortgage. So again, if you're paid bi-weekly, just like teachers, all you're doing is cutting that payment in half. And it's a sneaky way to make one extra payment, which makes a huge dent. Or Andrew, what happens if my servicer doesn't offer biweekly and make it so user-friendly like it did for those two teachers? I say, look, let me show an example so you could DIY, do it yourself. You could do your own version of this biweekly program, even if your servicer doesn't offer the ability to do so with them. So there's so much talk about the biweekly program that it makes sense, saves you all this money, but wouldn't it be nice if on a cutesy whiteboard with all these Sharpies, we gave you 2 examples so you could see the exact power of the biweekly program of someone who's just making that one extra payment a year that they're not even really going to feel that monthly payment. You cut it in half. It comes out of your check every other week. What that would look like, the 4 years off the top on a 30-year loan, cuts it down to a 26-year loan. Is that even worth it? It doesn't sound like, oh, it's worth it. Let's give you 2 examples, one at around a $3,000 a month payment, plus one at a higher example and a higher payment, what that looks like from a savings perspective. Let's take a peek. So the first one, let's say they had a $3,000 a month mortgage payment. So if you think every single month, which is 12, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So these are the amount of months in a year. So they make $3,000 a month times all these months, creates about $36,000 a year in mortgage payments. But if they do from a 52-week perspective, if you cut that in half, there's 26 bi-weeks. So if you cut this in half, that's only 24, right? 12 times 2 is 24. If you make 2 payments every month of year, it's 24. The biweekly program is 26. So that shows you when you pay biweekly, instead of twice in every single month, you get that one extra payment because 26 bi-weeks is actually 13 months. So there's where that extra month comes from, right? So if we pay one extra month for 26 years, so you have 26 years times 3,000, so that's $78,000 in extra payments. Why would you ever want to do that? Because if you look at 4 years off, right? So that's $36,000 a year So that's $144,000 in future payments that you're not going to have to make. So if you remove that $78,000 from the 144, that's about $66,000 in savings. So if you make one extra payment, so you've paid an additional $3,000 every single year for, say, 26 years. So of course, that extra $78,000, again, you're like, why would I do that, Andrew? Well, because you're going to save 4 years off the life of the loan. 4 years of actual payments is about $144,000. It's not pure savings. You have to remove your additional prepaid, payments. So that's $66,000 in net savings. So as you see, for even just a $3,000 a month mortgage payment, which is something like a $500,000 loan, it makes sense all day. But if we beef this up a little, guys, if we look at, let's say, an example of $1 million sale price, client put 20% down, $800,000 loan. Let's say their payment was $5,000 a month. Same thing, right? So you have 12 months. You have 13 months of payments because, again, the biweekly program, 52 weeks, 26 bi-weeks. Cut that in half. That's 13. So there you go. One extra payment. 13. I know you guys are ASMRing right now. 13 minus 12 is 1. So there's one extra payment right here. So there you go. So that $5,000 a month, if you have 26 years where you pay an extra $5,000 each year, that's a lot, right? So it's $130,000 of extra payments. That's a lot of money. It's a lot. You could do it $130,000 of extra payments. But if you look at the 4 years, $5,000 a month is $60,000 a year times 4, right? So you see where this is going, guys. So that's $240,000 in savings initial. And of course, you want to subtract the $130,000 that you've paid extra. So that's $110,000 of savings. So this shows you why this program is so amazing. You know what, guys? Let's not stop there. Let's beef it up a little bit more. Let's look at a $8,000 a month payment. $8,000 a month. That $8,000 a month, same thing. 8,000 times, this is exact math on how this works, right? $26,000 times 8,000. That's going to be $208,000 of additional payments, which sounds like a lot. And it sure is, guys. It's a lot. But again, if you look at $8,000 times 12, it's $96,000 a year of payments. You don't realize the power of these programs. Times 4, it's a little less than $400,000 you're going to cut off. But if you subtract the 208, let's call it $190,000 of net savings. So as you can see, it's just more mental manipulation. If you take your payment, turn it to the biweekly program, but it's $3,000 a month, or $5,000 a month, or $8,000 a month, you're going to have savings. And again, 20 years goes in a blink of an eye. So a little over 20 years, if you save $190,000, right? If you save $110,000, if you save $66,000, what could you do in the future with that money? It's endless. Guys, you know what? Let's do this. I love whiteboards and I certainly love math, but in the description, make sure you click the link. Click the link, guys. Our team has created a bi-weekly mortgage payment calculator. So what it's going to do is going to show you the bi-weekly program, the amortization schedule, all the savings. So make sure in the description you click the link. Make sure you grab this, guys. For a limited time offer, it's free of charge. No, make sure you click the link, grab it. It's going to show you a clear illustration of all this. I don't know if you're like me. You want to sit on the couch, have a nice glass of crisp rosé, and put in your specific mortgage payment. It'll show you if you convert it to the biweekly program, which again, you can do yourself. All you have to do is make one extra payment, guys. This is a DIY type situation. If your servicer does not allow biweekly programs, all you have to do is take your $3,000 a month or your $5,000 a month, $8,000, and just make either one extra payment a year, maybe tax season, you get a refund, or divide that payment by 12 and just add that so in other words, $5,000 a month, it's a little over $400 a month, so pay $400 a month extra because over the year, it'll be one extra payment. So that's, again, another cutesy strategy if they don't allow biweekly payments at your servicer. Just take your payment divided by 12, add that so every single month you have the main payment and the rest that goes towards principal. But again, go in our description, click the link, make sure you check out our calculator so you can see the exact savings that you can get right now. If this video blew your mind, you need to make sure you watch my next video, how to pay off your mortgage faster. We're gonna give you tons and tons of more hacks to pay off your mortgage faster and not just the biweekly program. Check it out, guys.